Hello, everyone, and welcome to episode 6 of our weekly podcast, Long Shot. Sharad, how are you?
I'm very good and it's good to be here.
Right. So, the market's crashed, right? It's down 1,000 points. Are you sad, man?
Yeah, I'm very sad. Yesterday was a bloodbath in the Western markets. Today you're seeing that trickle into the Indian market. So,
Right.
not the nicest thing to wake up to.
But you're not as sad as me
Why is that? Why are you sad?
because I can no longer access Google Plus after 10 months.
Do you even care?
I do, man. I do. I think it's the only legacy of Google which was there in the social media domain. And as an enthusiastic Indian, and as you know, all Indians love Google.
Yeah.
I was really looking forward to it. I mean, the only thing is that I've never checked it since I have created an account. And apparently, as per Google, also the average session time has been 5 seconds.
Yeah.
But it's an end of an era, as they say.
Yeah. 5 seconds that you'll never get back.
Yes.
But talking about which, they are obviously reported a data breach and 500,000 accounts were sort of compromised. I'm hoping yours was not one of them, if at all. But
There's nothing on it, so I think it's fine.
but what's going on? What's the spice behind the story?
Well, yeah, though, interestingly, this came as a part of an internal probe of Google, cleverly named Project Strobe.
Yeah.
And the objective of the probe is to to review third-party developer access to Google accounts and to Android device data. So as you know, like on Google Plus, like on Facebook, there are a lot of third-party apps which can get hosted, like games, quizzes,
Right.
and any other sort of developer applications.
Yeah.
They are actually there on the Google platform using the Google data. So that's where the breach happened. So the mechanics of it is that if, say, you are a user of Google Plus, you have signed in, you have put in your details, name, email, occupation, gender, age, things like that. A part of that would be private, a part of that would be public, and as per your privacy settings. And say I'm your friend on the same platform and I sign into a third-party app on Google Plus, then the third-party app will have access to my private data. It will also have access to your private data. So that's where the entire breach has happened. So there has been a bug in one of their APIs, which has caused that.
Yeah, this sort of theme is not new. I mean, Facebook also did something, report a data breach, right? I think it was 50 million accounts which were compromised.
Yes, that's correct. Yeah. So, but I think in case of Facebook, their liability from this will be more severe because their data breach came after GDPR rules were in place in Europe.
Yeah.
Whereas in case of Google Plus, this breach has come. This breach was officially spotted in March 2018.
Yeah.
So that's before the GDPR rules came in.
And just to cut you short, GDPR sort of has a 72-hour window. Is that correct?
Yes, GDPR is a European Union based data regulation which says that if there is a data breach within your platform, you're supposed to report it within 72 hours. If you don't do that, then the fine can be anything between 2 to 4% of your annual revenue, which for these companies is massive.
Yeah.
So as per The Economist, I was reading that Facebook, if they have to pay the 2% fine, it will be a liability of around $813 million.
Yeah. Sizable, certainly sizable.
Right. So I think that it's fascinating to see. I don't really think these breaches are very new. I mean, they have been happening since these platforms were live, but that's where we are seeing the power of regulation.
Yeah.
That these things are coming out in public domain at a much more frequent level. The good thing is in case of the Google Plus breach, there was apparently no security breach in terms of the post or the content that the users have posted, which is the most valuable information.
So in this, it's basically name and
so profile information.
Profile information,
exactly.
basically, right? Yeah.
Exactly. So they said that they're going to phase it out over the next 10 months. So times are changing.
Yeah, they certainly are changing.
So the tech platforms are all in the news for the wrong reasons.
Maybe it's time to switch your investments to commodities.
Commodities, yes. Speaking of commodities, nice pivot, Sharath, I must say. The next topic online is discussing the sovereign gold bond scheme.
Yeah, sovereign gold. It's interesting, fascinating, because I was reading about it.
So what is it exactly?
So it's a scheme by the government of India. Mm-hmm. It's called the sovereign gold bonds, which is a bond. It's a financial debt instrument, as the name suggests, but the performance of which sort of mimics the underlying price of gold spot price. Right. So essentially, you're getting exposure to gold without actually physically purchasing gold. Right. So now there are multiple ways to think about it. This current scheme that they've just started kicks off this month, which will and the products are available at stock exchanges, banks, post offices. It's I think October 15th is when you can start getting them. It's essentially a 2.5% coupon rate carrying bond, which is denominated in grams of gold.
Right.
So you pay cash up front to buy that bond, you get a 2.5% coupon, and the performance of that bond mimics the performance of the underlying asset, which in this case is gold. So that's the sort of high level, succinct view on what it is. Now, there is there are a lot of ways to think about it, but one, gold is an investment asset which is valued, well regarded and valued across. So for portfolio managers or investors who want to diversify their portfolio using gold without actually physically buying gold, this is an interesting opportunity. And second, we've talked extensively about current account deficit and the impact, and we talked about the non-essential versus essential list that the government put out in terms of raising duties on certain elements. Obviously, gold wasn't there in one of them. Wasn't one of the items. So this has the same underlying logic, I would say.
So because bullion in the international market is purchased in dollars.
Correct.
So with this scheme, institutional investors in India won't have to buy that much bullion, because the retail consumer can fulfill the requirement by buying the sovereign gold bonds.
Exactly, that's essentially it.
Even though these are redeemable in cash, it just is a mimicking instrument.
Yes, that's exactly it.
I'm sure they are giving some sort of a tax incentive, right?
So the capital gains tax is zero.
Okay.
Obviously, the interest coupons will be taxable, but so there is a tax incentive on it as well, and largely helps in disincentivizing people to actually shell out USD to purchase gold. That sort of sits in well with
maybe not directly, but indirectly through,
yeah, and that fits well with the whole current account deficit narrowing and how to tackle it. One of the small little moving pieces, I guess.
Right. So interestingly, tell me, we have these gold loans as well, right? In which you can actually collateralize or mortgage physical gold. Can we use sovereign gold bonds for the same purpose?
Yes, you can. And that's actually a very interesting point you bring that up. Yeah, it can be used as collateral for loans. And I think the loan to value ratio is about 75%. I think
that's the cap, I think.
That's the cap, I think.
I mean, that's the cap of physical gold. So they are matching it.
Yeah, it mimics that. So it can be used as that as well.
Right.
So certainly an interesting product.
Considering the optimistic wave of markets, I think it's time to go long.
Yeah, I think we can go long, and with the markets tanking and NBFCs in sort of disarray, it seems like an interesting alternative. But talking about NBFCs, talking about your in-house expertise in ILFS that you've built over the last few weeks, let's talk a little bit about this rather interesting news in SBI trying to buy some high quality quote unquote assets from these NBFCs. What are your thoughts around it, and what's exactly happening?
So what's exactly happening is that State Bank of India has just said that they are going to buy 45,000 crores of loans from NBFCs because NBFCs are unable to fund these assets. And on paper, it looks like a bailout. Market reacted positively. But I see something very interesting here, because SBI is pretty much behaving like a distressed asset buyer, which is not really their core business, right? They are, instead of underwriting loans directly, they are buying loan portfolios from NBFCs. And which is very, very fascinating. It's a completely different business model, and the most interesting part in this is that the biggest source of finance for the same NBFCs are banks like SBI.
Yeah.
So I think this can be a brilliant captive strategy where they just switch off the funding tap.
Yeah.
And NBFCs get into trouble, then they buy the loans at a discount and then sell them off later.
Wearing the vulture hat, it seems.
Yes, it's very vulture-like. But I think you require a very different set of skills to execute this. It's not the same as underwriting loans at a retail level.
Yeah.
So I hope they're working on that, and they have hired people who can manage these kind of distinct asset portfolios and turn them around.
Yeah, I actually think I'm happy that SBI is thinking along those lines for some reason. It's price arbitrage, right? That's sort of the underlying premise of it. So once you pick up those high quality assets, is there something that can be done to it, or it's just?
If they're high quality, you don't have to do anything.
Yes,
it becomes a price based transaction.
Yeah.
But even though this is, the positive angle that you see is valid.
Yeah.
But I think the caveat here is that there is a clear, I would say, moral hazard here, because SBI is a source of funding for the same NBFC that it is trying to bail out.
Yeah.
Right, and they are on the asset side. They are both in the same business. So I mean, I can see that this, because this started as a 15,000 crore buyout.
Yeah.
But then I think suddenly someone in the room flagged that, okay, let's scale it up a notch, and yeah, it has become a bigger part of their strategy.
3 times bigger.
Yeah, so yeah, that's very interesting way to diversify their strategy. Well, speaking of diversification, Sharad, I think today's conversation was very diverse. We touched data, tech, we touched personal finance, and now our ILFS, NBFC favorite topics.
Yeah, no, fairly diverse and somewhat complicated as well, I guess, but all topical, I would say.
Yes, I hope so. Well, on that note, this is Nikhil
This is Sharath.
signing off.